What is going on, investors? Welcome to my channel. This is Jason, aka the Frugal Investor. This is going to be a quick portfolio update video. Give you guys a quick update on my portfolio on this channel from all my guys out there that watch my channel on a regular basis. I try to give you these portfolio updates every week, what I purchased, what I sold, um, to give you an idea of how my portfolio is doing and what holdings I'm buying and what holdings I'm selling. So I've recently gone through a big change in my portfolio. I've held some companies for 1 year. I purchased a lot of companies in November 2020, and I took my gains from them after holding them for more than 1 year, and I pushed the gains in different companies that I was more conviction in, that I have more conviction in, that I understand better, that I know the business model better, that I know where the growth is coming from in the future years, that I can have a better idea of what I'm dealing with, what are the issues that can come, what are the pitfalls that can come. So I have taken those gains from the companies that I used to hold into companies that I understand better, and those are the companies that I'm going to give you guys an update on today. The most major companies that I hold in this portfolio, the reason I hold these companies in this portfolio is because, and the reason I took my gains from the previous companies is because, first of all, there were a lot of companies I held. I used to hold like 26 companies in my previous portfolio, which I sold out of. And it was a lot of work to keep up with all those companies. A lot of work to keep up with the sales goals, with the revenues, with the news, and with all of that stuff to take care of, to listen to. If you're a person who does a full-time job, it's a lot of work on your hand that you have to look after, and then you have to look at those companies as well. So that is one of the reasons I got rid of a lot of the companies, and I refinanced those gains. I put those gains back into these companies. Now the reason I hold these companies is because, on a level, I understand them better. I understand their business model better. I understand their management better. I understand the growth, where it's coming from in the future years. What are the pitfalls? Where can these companies fall? What can be the issue that can lead to the death of these companies? That's what I understand better. I've talked to their sales team, I've talked to their investor relations or management. None of these companies uh, are one of those companies where I haven't talked to someone in their sales team, in their branches, in their management, or I haven't. Some of them I've worked for. So these are the companies that I understand on a deep, deep level. Their business model, where the money is coming from, where the growth is coming from in the future. For example, Medifast. So Medifast is one of my biggest holdings. Let's start with the portfolio now. Medifast is one of my biggest holdings, and it pays a dividend. Now, the reason I hold Medifast is because it has developed a product that is used to help obesity. Now, the product is there, but there is no moat with the product. The moat is with the 50,000 coaches that the company has. The company has more than 50,000 coaches that were the users of the products, and now they're selling the product for the company. Previous customers that saw a reflection, saw a change in their lives because of the product and because of the lifestyle that they promote, and now they've decided to promote that lifestyle and product and make money from it. So they are not only promoting entrepreneurship like something like Shopify, they're not only promoting entrepreneurship, but they're also promoting healthy lifestyle. So network marketing company. Okay, I'm not gonna. That's why it's available so cheap right now. When I bought it, it was available at a P by E of 13 and a future P by E of 9 or 8, and now it's available at a P by E of 16 and a forward P by E of uh, 13 or 12. So that's the network marketing people generally don't have huge hopes for network marketing, but the business is such a solid business. It's headquartered in Maryland, not far from where I am. The business is such a solid business, I just can't miss out on it. So that's the reason I hold this. One of my biggest holdings, very high conviction, cyclical in the nature, but still a huge growth upcoming in the future. Followed by Costco. Now, Costco, I paid a premium for this. Okay, I paid a premium. I admit, I paid a premium for Costco. I paid a P by E of 37 or 38 for Costco. And the reason I did that is because I can see the growth in the future. I can see the growth in Mexico. I can see the growth in Canada. I can see the growth even in the United States in some cities. I can see the growth in China. I can see where the growth is going to come from. The management is becoming better at increasing the profit margins year over year, and I can see where the growth is coming from in the future. Okay, I can see the business model. I can understand it. It's a solid business model. It's very hard to compete with such a moat. They have a very well developed base of customers. So hard to compete with. I can see the growth. I can see the pitfalls. I can see the business model. I can understand it. I know it. I'm a user of the product. I hold it. and I paid a premium for it. Followed by Google, same thing, paid a premium. Didn't pay a premium for it, actually. My P by E of Google is somewhere around 25 or 26. But same thing with Google. I've been buying it, been buying it. And the reason is because I'm user of the product. I understand it very on a deeper level. I understand what they do. I understand where the growth is coming from in the future. Followed by Facebook. Now, Facebook is interesting. The reason Facebook is so interesting is because, and I've been buying it like crazy in the previous month when it was down, is because they have the balls to go after something that no one is going after. All these tech companies, Microsoft, Google, all these big players, they're sitting with so much cash on hand, but they don't know what the hell to do with it. And Facebook CEO, they have the balls to go after something new. They have the balls to change their names, and that's what I like about it. That's what I like. That's the whole spirit of America is taking risk. The whole spirit of capitalism is taking risk, and that's why I'm a big investor in it. I might not like their product too much. I don't use it on a daily basis. I'm not a big fan of it. But the spirit, man, the spirit to go after things like that when all other CEOs are sitting on cash and not doing anything with it, the spirit is just amazing. And they have cash cows like, Facebook and Instagram, just splitting out cash like crazy, okay? So there is that. That's why I'm a big believer in Facebook and I will keep buying more down the line. Followed by Lowe's, they have a lot of debt. Just like Home Depot, they have a lot of debt. But future is bright for companies like this. Followed by Apple, same thing, long-term hold. Uh, Electronics products, they sell iPhones and all that kind of cool stuff, computers and stuff. Let's see. They have a huge moat with their customer base. They have like kind of an ecosystem, just like Salesforce is an ecosystem. They have an ecosystem, Apple, and that is what I'm excited about. Holding it for the long term. Followed by Arrow Financial. Now, Arrow Financial is a small bank, New York bank, community bank, growing $500 million, around 500 to $600 million is the market cap, growing fast, growing faster than some of the bigger banks, and also paying out very good dividend. During the crash of 2008 and 2020, they didn't miss out on dividend. JP Morgan and Chase missed out on a dividend in 2008, but Arrow Financial didn't miss out on a dividend in 2008, and that's what I love about it. So I hold it in my portfolio, and I have huge hopes for this. At least 8 to 9% return cash on cash from this one, from just the cash flow model. Okay, and I'll go on a deep dive analysis of Arrow Financial in one of the future videos. I want to do a deep, one of my favorite holdings. That's why I hold it in such high regards and I have so much money into it. Alibaba, long term hold, value play, good business, solid business. Let's see what happens. Equinix, same thing. Very bullish on data centers, long term hold. I think data centers will play out to be a huge role in the future as we become more data hungry species. Same thing. Long term hold, let's see what happens. Kimball Electronics, value play, good tangible book value available, good price available, less than 8 P by E ratio if you subtract the tangible book value from the price of the stock. So, value play, long term hold. Uh, Industry is growing at 4 to 5% year over year. Some years are expected to grow about 15% in the next 3 4 years. Let's see how it plays out. But value play, long term, cash flows will be good. USANA, no debt, long term, safe play, value play, um, no debt at all on the balance sheet, small company, very high growth expectancy in the future in China and in the Asia Pacific markets, even in the United States, coming out with new protein bar. Both just bought a facility in Massachusetts. Very bullish. Let's see how it plays out. Good management, smart management. The only downside with this one is they're very diversified in many products. They're selling so many products, but their main selling product is their vitamin pills that they're selling in South Korea and China. But let's see how the future plays out. They're narrowing things down. They're getting rid of the products that are not selling, and that's why I'm bullish on this one. Capital One, used to work for it. Met the CEO, really nice company, really nice business, very good, very innovative, spearheading the lead with technology banking. Will be here in the future because they're innovating, they're developing, they're not dead in the water. They're growing, they're developing, they're bringing in new people. Technology is their main focus, and that's why I'm so bullish on it for the future. JP Morgan Chase, same thing. good investment portfolio, good investment, what do you call, good investment branch, good banking branch, good business banking branch, good retail banking branch. People in the banks, they're good branches. People love the CEO, very good management. Jamie Dimon, one of the best bankers out there, and very bullish on it for the long term. Also, like a savings account, pays out a great dividend. JP Morgan and Chase. Trinet Group, employment company, HR services company, sorry, really good. The reason I hold it is because it's available at a better P by E than Insperity. Insperity is available at a P by E of 40. Insperity is a company based in Texas. CEO is a very smart person. Started the company from scratch. Started the company from very humble beginnings. That's what I love about it. Um, Available at a premium because it's a very high growing company, and the industry is expected to grow at moderate 9 to 10% level year over year over the next 5-10 years. The reason I bought both of these companies, one is available at a premium. Very good business. Second is available at half the P by E of this one. P by E of 19 and a forward P by E of less than 15. Both of them are good businesses. Both of them have good reviews. I talk to their salespeople. Both of them have good things to say about each other. When I talk to Trinet, they say good things about Insperity. Insperity say good things about Trinet. So both of them are good. Insperity's products are a little better than Trinet. That's what I have found out from my research and analysis. Insperity's products are a little better. Their profit margins are a little better than Trinet. But I still hold both of them because I want to get a better control of the market to reduce my risk. That's why I hold these in my portfolio. So that is my portfolio, guys. And the main reason I'm holding this portfolio is not I'm not chasing a dividend yield, or I'm not chasing some growth, or I'm not chasing some imaginary growth number year over year. My mission is simply to hold good businesses in my portfolio that I understand, that I have a better understanding of, that I love, that I've talked to the sales team, investor team, CEOs. I've used their products on a daily basis, or I know the pitfalls, where the pitfalls can come, and I know those pitfalls are not going to happen. For example, simple example, USANA, one of my holdings, company has no debt. What can be the pitfall? If the company has no debt, how can it fall? They have no debt. How can it fail? What, where can it fall? Small company. Okay, it can grow exponentially, but the risk is very, very low. The reward is exponential. These are the type of companies that I hold in my portfolio. The risk is low, but the rewards are mind blowing, exponential. Small companies, some of them, and they have huge markets and huge margins to cover, catch, and grow. And that's the reason I hold in this portfolio. So I'm not chasing a dividend yield. I'm not chasing some growth number. I'm not chasing some fugazi numbers and all that. I am chasing businesses that are going to increase their cash flow, increase their revenues, increase their earnings year over year, are available at good prices or good value. If they're not available at good prices, I know what I'm paying the premium for. I'm paying the premium in case of Costco for a moat, in case of Google for a moat, in case of in case of Insperity for a moat, for a customer base that's well established, for a management team that's well proven over past 30 years, 25 years. That's what I'm paying a premium for. Okay, that's my strategy. And that's my strategy to hold these businesses for the long term. God bless me, help me to help me hold these businesses for the long term. And one of the main reasons I make YouTube videos, not it, one of the main reasons I make YouTube videos is show my journey to my future generations. That's one of the main motivation of me making YouTube video. I don't make it for uh, you know monetary benefits or anything like that. I make it to show it to my future generations what how I started. And the second main reason is to hold me accountable. To hold me accountable so that I know that someone is watching me. You guys are watching me, what moves I'm making, and that holds me more accountable so that I don't just go out and sell all of these positions and keep shuffling money here and there and do stupid stuff. Because sometimes I tend to do that. That is my weakness. I sometimes get emotional with my portfolio, and I shouldn't do that, but I'm just human as everybody else. So that is the main reason I make these YouTube videos for my future generations and for you guys to hold me accountable. All the guys that watch my videos, really appreciate all of you. And that is why I try to make these YouTube videos, give you guys an update so that I don't make any silly mistakes because of my emotional dumb self. So that was a quick update on my portfolio, all the holdings I hold. Again, not chasing any dividend yield, not chasing any growth fugazi number, just holding good businesses that I understand at a deeper level. And that is going to be my strategy going forward. Now I've named it Fisher Lynch and Buffett portfolio. because I've been reading a lot of Fisher recently, a lot of Phil Fisher books, almost all of his books. They're damn expensive, but I bought all of them and I've almost gone through all of them. Peter Lynch, I've read all of his books. I've been watching all of his videos, read both of his books, watched all of his videos. Buffett, I've been reading his letters that he has been writing, and I've been watching a lot of videos as well. Now, I should mention Mr. Benjamin Graham in there as well because I've been reading his book as well. Now I'm going through Security Analysis. That is a book by him and Graham Dodd. Really big book, but I'm going through it slowly by slowly. And I should mention Howard Marks in here too because of the market cycle tantrum. That's why I hold cash in my portfolio about 20 to 30%, so that when the market cycle happens, when the market goes down, I can jump in and take use of those opportunities to buy good businesses at cheaper prices. And that's what I suggest everybody. At least hold some part to go along with when the market goes down. No matter what anybody says, I think that's the best way to go. That's the best way you can benefit. Imagine what you could have done if you would have held that 20 to 30% of your portfolio in liquid, and when coronavirus happened and when the pandemic happened, and you could have bought companies at those prices. It'd have been amazing. Okay, you could have gained returns of over 100, 150%, but I was not too smart to do that. But you could have done that if you held cash, and that's the lesson I learned. So that is my strategy: buying these businesses, holding them for the long term, and also holding 20 to 30% of my portfolio in cash, and also not chasing dividend yields or not chasing some growth number. That was a quick update on my portfolio. That was a quick strategy of how I'm going forward. A quick accountability update of what I bought, what I sold, and all that. All the companies that I'm buying this week are going to be Kimball Electronics, since it's down by 12%, Capital One Financial. Anything that's in the red, I'm basically going to keep buying it. Anything that's in the red. When it turns green, I'm going to start buying something else. That's my strategy. Well, thank you for watching, guys. This is the Frugal Investor. This was a quick update on my portfolio. Please don't forget to like and subscribe. This is the Frugal Investor signing out.